Hello, folks. Brendan Chapman with you today. It's another edition of the TheoTrade video for October 20th, 2025. And the question is, what's next for home builders? You know, we look at the S&P 500 today. We're up another 1%. Looks like we're within a stone's throw of an all-time high in the S&P 500 index. I mean, are you bullish? Are you bearish right now? And no matter how you perceive the market, you come over here and you look at the percent change today. While the S&P is up 1%, gold's up 3%. Whatever the S&P can do, gold does 3 times better. And that's not a great scenario. Is it pure just speculation? People running in, driving up gold prices? Yes, there is a paper market for gold. For example, /GC. This is a paper market that does apply leverage, right? So that paper money, if the leverage starts to come out, gold prices will come down, and sometimes sharply, and even silver prices as margins increase, as people go from buying aggressively to then selling aggressively. We can see some wild swings. You know, in silver, for example, we raised margin back here on the 9th, did lead some for intraday volatility. And so we're kind of in this mix right now. The S&P just wants to push based on dollar devaluation, but in reality, I mean, there's more buying pressure in gold than there is the S&P 500, which historically has not actually worked out all that well for the market. If we look at DXY, for example, or $DXY, this gives us a perspective. Is the dollar strong? No. Is it significantly weak? No. The last couple days back here, middle last week, we saw some more selling pressure in DXY. The trend's been a little higher, but remember that the DXY is the dollar in relative terms, dollar relative to the euro, dollar relative to the British pound, dollar relative to the Japanese yen. But 57% is weighted to the euro. And so right now, we're not seeing a lot of strength in the dollar against the euro. And today, we're seeing the dollar's down against the euro. The general trend has been in favor of the dollar. The dollar's stronger today against the euro, going down because the dollar's in the denominator is bullish for the dollar. But we are seeing a trend down, just like we're seeing on the DXY. The dollar strengthened modestly. But remember that this isn't necessarily a bullish construct of the dollar showing strength against the euro. And if gold's going up, what it tells you, the dollar's going down in real terms, but in relative terms, the dollar's strengthening modestly. But oftentimes this does translate into the dollar strengthening outright if there is some sort of credit crunch, right? If there's some sort of demand for dollars because a lot of debt, even foreign debt, has to be repaid in dollars. So we have all this stuff kind of looming. We had bank earnings last week. Bank of America ended up popping up. JP Morgan didn't really go much of anywhere. There were some credit loss concerns or whatever, despite the fact they beat. Stock still went down. There's a fairly kind of divergent view in the financial space, and that's being reflected in home builders. For example, the data does not look good for home builders, right? We're seeing that existing homes are trading at a premium to new homes. Why? Because people don't want to sell their home. They're afraid of buying a new house and losing their cheap rate with which they borrowed at to buy their home or to refinance their home. Going to a new home requires a new loan at a much higher rate. Well, why are the home builders then positive? Because they look at the Fed and saying they're in the midst of cutting rates. The Fed's expected to cut 2 more times before the end of the year, the October meeting, December meeting. Well, where are they going from there? Again, the Fed may aggressively cut rates if we start to a recession. But isn't that exactly what's wrong with the market, is the fact we are teetering on recession, which historically has not been great for home builders? Now, your Toll Brothers, for example, or DR Horton, DHI, there is a luxury market. There's more of a middle class and lower class market. We do have kind of a K-shaped economy where the luxury side tends to do well and the lower to middle class typically is not doing well. But if we look at both these stocks, I think we recognize that there is overall some negative sentiment being priced in despite the fact the Fed is about to cut rates. Thus, this divergent view between home builders themselves seeing increased optimism by virtue of the Fed cutting and just the reality check of credit conditions and the state of the housing market for consumers and the job market for that way. Well, because why is the Fed cutting? because jobs are softening, right? We're not getting jobs data right next to a shutdown. But the point is that we're kind of at a point where, look, I mean, the optimism of the home builders may be misplaced. Well, as we look at Toll Brothers, as you look at DHI or the ETF, the iShares ETF that tracks home builders, home construction, we're seeing a little bit of a rally over the last week off our lows. These can create opportunities because we do have what? Lower highs and lower lows. We do have a downtrend, and we're seeing a little bit of a bounce back here in ITB. Let me just clear off my old drawings here. And I'll bring up some fibs. We'll draw it kind of as a retracement starting there to there. We're at about a 50% fib correction. We look at the first downdraft here. This is my seed wave. And we could project based on that. But, 97 and certainly 85 are in view if the housing market doesn't snap back. Well, let's take a look at the trade today because, look, we can try to digest all of this stuff in and of ourselves. You can do an AI search and try to make a justification why you might trade one thing or another, why you might not trade anything at all. But the fact of the matter is there are other resources with which we can leverage that are not just the spoken word or ideas that people just suggest about an industry or a sector or a stock. This is actual skin in the game. They're trading based upon their expectations. My personal feeling is that we are probably leaning towards softness in the economy, and it's probably not going to support the housing market in the very short term. And so as a result, when I look at the trade tab here, and better yet, I'll show you how I found it. This is the Ghost Print Surveillance Console. And so with ITB today, there was a spread. They bought the 100 puts and sold the 90. Now that's still traded below the ask, but again, sometimes you can still see that the pricing isn't favorable because they want to get in. And in this case, they're buying a downside spread. And you can see this. It's just difficult to find these opportunities in Thinkorswim. I guess once you have it, it's not hard to then see it because you can orient it because you know the symbol, etc. But these kinds of trades gives us a time frame, a target, and a symbol and a direction, right? Well, if we look at ITB, they're buying the hundreds, which are just slightly out of the money here, down here at 100, but they're selling the 90s, which is at our 223% projection. How much did they pay for it? Well, if we come in here, we'll see just the difference here is about like 180, 179. So again, on a $10 spread, this is a low risk, high reward if the price can get to 90. But these options are also kind of pricey out there. If we come up here to November, and it's only 32 days away, we look down here, the volatility is at 38. The volatility here is at 32. There's still stuff to sell even at the 90. But the point is, this gives us an indication that someone's taking a decent sized trade, looking at $90 being that kind of downside projection, but looking for it to get below 100. So as traders, you can take your perspective on the housing market or whatever it is that you're looking for at that point in time. But remember, there's other resources available to help confirm or not what your intentions or your logic is for the market. And for today, a pretty apparent setup, taking a bearish position in ITB with a $90 target price, which gets us back again to prior lows down here. Seems pretty reasonable to me in the next 30 days. Whether the market holds up or not, all we need is just a recognition. Maybe the housing market's not as good as it is. Maybe we start to see some poor earnings from some of the components of ITB. Whatever it is, we could readily see the ITB ETF test its lows even as the market is testing its highs. And I kind of like that scenario. Multiple paths to the downside, maybe one or two paths to the upside. So we're kind of looking at this idea. And again, the pricing, when you look at the volatility, playing bearish spreads on ITB, we can buy the lower vol and sell the upper vol. Sell the higher vol, which is exactly what we want. Now you could get things more connected. You could go 103, 101. Go buy deep and wide, 112 strike vertical. Can I get that for less than 80 cents? You're getting it for 80. And that's a 42 delta. But we get to 100. You could even shift that down a strike. Let's say 102 and 100. Now you're getting towards that strike about 85 cents. So again, either scenario, we're getting reasonably, we're probably looking at some spreads, so 75 cents, a little wider spread in here right now at some of these strike prices here. But The point is you could play or track that downside, even retesting our lows. You could get out of a spread like that for a 70% gain plus. Well, folks, I just want to kind of share that trade with that we're seeing today and just add some perspective, because even if you're bullish on the market, you think that technology is going to continue to lead the way, even though gold is. But the reality is there's other aspects of this market that may not necessarily perform well, that may have more pathways to the downside than to the upside. And I just want to share those with you today. And we catch you back next week. If you want to join Ghost Prints, or you'd like to become a member or get access to the surveillance console, we do have a masterclass coming up on October 31st. And we're going to delve into the big squeezes that are occurring in the market today. And I got a watch list down here. You're seeing ABAT. You guys see a bunch of these, but what causes big moves like this, or more importantly, big moves like that? That's what we're going to cover. And we're going to show you how you can use the console to identify these prints that are occurring in the markets every single day. Well, you can call if you have questions about it, you want questions answered, you want to join us on October 31st for our TheoTrade squeeze bar event masterclass. You can call 623-244-5657. And folks, have a great one. We'll catch you back next week on the video. Thank you.